The weekly outlook. We're gonna do the DXY, Euro USD, GU, one shot, one kill, those things. Then we'll do ES and gold. That's what we're doing. So as you can see, we have a obvious macro change on the dollar right now. We had this moment here, right? That was our market structure shift on the weekly, and then this is our break in market structure, correct? So even though we're reaching down to that bullish order block, and even though the order flow has been bullish, right? We recognize this bullish order flow. The macro changed the moment this was hit, and the moment that they failed to break through this buy side imbalance, which cleared the sell side inefficiency, and we had a clean change in the state of delivery, correct? So when you see that kind of thing happen, the macro is now changed. The order flow hasn't changed yet, but the macro has changed. And this is something that I think a lot of people are forgetting when they're doing their analysis, is that you can be right about the macro and wrong about what day the order flow is actually changing, or vice versa. So this is what we're highlighting. We understand that we have a bullish support here. This is definitely something that we're looking at, but the way that we've traded aggressively into this, the only way that we do not sell to take out sell side liquidity here is if Monday creates indecision on the daily, and in other words, creates that doji or inverted hammer, right? And then we'd get a swing low for Tuesday. So we'd be watching this zone here. Other than that, this is sell side liquidity. Correct. And we would be looking at this to be an area where price would be running down into this liquidity pool here. Okay. So this will be the liquidity pool. So if you're asking me, you shouldn't be asking me my bias. It's clear in my marking. All right. Now you can recognize this bullish order block here as well, which lines up with that. So you have a bullish order block under the sell side liquidity, reaching for this liquidity pool. So the best thing to do is just to, what I've been doing lately, guys and ladies, is just marking up the entire block. That's the DXY on the weekly. Not putting any levels on here, because I know that we're basically going to be looking at this last low being broken. We're going to look at arrays that may have formed within this sell side delivery to see if we can get more pinpoint levels. Let's go to the daily, and there you have it. It's very clear, right? We're clearly below this low here, aggressively, and we have this old BPR here. So we want to see, is this breaker on the daily? This is a daily breaker on a weekly order block. So it's a daily bullish breaker / weekly bullish order block. So we're recognizing this as an area of support. If they cannot break this, fam, if they fail to break this, that means we'd be looking at a retracement back into this area here. It's very simple, right? Swing low forms in here, we're coming back up here. This would be short-term bullishness, and or proven bullishness if they take out this high. So I like to keep it very simple. This is a BPR, right? Monitor these levels. Daily BPR. I think I used the wrong tool. Sorry. Does this make sense how I'm going about this, everyone? Like I'm literally just taking it from one reference point to the next. Try not to confuse anybody. It's daily BPR. We break this, right? Then it would give us indication that we're going here. So I'm not going to leave this I buy on here because I'm not expecting it to go up there right now. Right now, I'm expecting it to do this. Right? Because the order flow is bearish. So if that's the situation with the dollar, then we should be looking at EU next. Any questions about this before I move forward? Waiting to see your question, and then I will move forward. While we wait for Elizabeth's question, just a quick review once again. Resolve and buy side delivery. When they ran this low, this was a weekly market structure shift. They pulled back into premium array and shorted with the redistribution short last week here. So this redistribution short resulted in a market structure break. What makes that a daily PPR? It looks like it was traded up and back through. There's no up candle in here. So it was up and back through. That needs to be rebalanced. Is that a market structure? Yes, this would be the last level of redistribution, level 2 redistribution before completing the model. So this is the last BPR. You know, so in other words, we're in OTE zones, right? I mean, we can do wick to wick, or we can do body to body, which I tend to do body to body. But and really, the larger swing. I mean, this is it. So I mean, we already broke through OTE. In my opinion, I think like it's a wrap. Not saying that they can't react here, right? We have this fair value gap inside of the order block breaker, all that. So it's a BPR. The way they traded through it, if you go to a lower time frame and look at last week's price action, this is the only up candle within it. So in my opinion, they won't even break this higher. They'll come up to here and short. So I'm not expecting a retracement to this gap. If so, that means we get a swing low on the daily probably, right? They can open up, they break that sets up Tuesday to do this, right? And Wednesday, and then we can get order flow to kick in, right? This is the kind of week we can have if this level holds up. So just be aware of that. It's pretty clear to me that they are likely not to break this level. All right, so here we are in the Euro USD. Amazing, right? How quick it just switched up. So here's the question, is this a shift or is this the shift? Is this the market structure shift or is this the market structure shift?
I think it's that first one.
It is the first one. Yep. That is, this is
So
a break.
Is that considered internal liquidity or an internal high?
Yeah, it's within the range.
Okay. Okay.
Nailing it. So this is the break market structure here. It's huge. It's huge. Very big. Huge. All right. Great. Very easy to see this. We actually acknowledged already that it traded off of the balanced price range last week. All you needed to do was recognize it. Perhaps this week I would put more focus on currency so that I can actually like take the trade and hold them rather than just scalp them on Mondays. Okay, I'm trying to get rid of that. Cool. So that's what happened on the weekly. What are we looking for now? What are we targeting? It's pretty standard, right? We're looking for, and let me not assume that anything is standard. I'm just saying this is, you see this candle right here, the black candle? I'm looking at the low of it up to the high because this is a mitigation block.
You mean the low to the close for that candle?
of the black candle.
Yeah. So that's the low to the close.
Yes.
Okay. Okay.
That's what I'm looking at right now. This is the first place after it runs liquidity here. This would be the first area where I anticipate a reaction. Running this high would mean a movement, right? Now, because it's such a tight range, what I like to do is take it from the low to the high and just make a zone out of it. See what I'm saying? That way you have like a larger range to look at price hitting resistance. You have the low of this mitigation block, the mean threshold of it, which lines up with the low of the order, bearish order block. I like that a lot. And if you want to, give it even a little bit more space, you can just say, hey, from the mean threshold of this area, when you have nested arrays like this, you can kind of make a zone out of them, is what I've seen from my experience here. And what you end up having, this is how I get these ranges sometimes you see on my charts. This is what I'm doing. You see that? So we could run this liquidity, and therefore we're at resistance immediately. See that? So what does that mean for us if we're bullish on EU? It just means be aware that from this high down to this low, we're reaching potential turnaround areas. Even though we have a break of structure and the macro is bullish, the order flow is bearish till this high is taken. Then the institutional order flow is officially changed. This is something that I've been trying to focus on more, because what happens is we get these trending markets that have been bearish long term, and then we get one shift and we think that it's bullish forever. It's like it needs to break multiple breaks of structure. It can't just be one break of structure. You know what I mean? So just be aware of that this zone here is basically the weekly block, right? I'm not even going to mark it. It's just, what this is from being at the session. Going to the daily. Now look at what we have here. Beautiful market maker buy model at play, right? You see this accumulation phase. This is the phase that we need to be looking at, from this low to this high, right? We're looking at this accumulation phase. We're looking at all of this over here as our market maker buy model, right? Completion here. This would be completing the model. So ultimately, when we break this high up here, that's when you know that the order flow is officially bullish. Like the macro's already bullish. So what we're looking at now is like, okay, we have this break of structure. Do we really want it to come all the way down to this order block? Ideally, no, because that's a large expansion to the downside. This would be like a Monday, Tuesday, Wednesday short, Thursday potential reversal, right? That's what could happen in this kind of setup. So there's three scenarios, kind of like the marking that I sent up on ES. The scenario, the short-term trade setup is bearish retracement week, right? Bearish retracement week, buying at the discount array on the Thursday reversal. That would be a one shot, one kill. Short-term traders taking that, right? Day traders are short. If we get a swing high by Tuesday, right? Monday reaches up and closes in decision. Tuesday shorts, we get a swing high. Then we know where it's going. We're day trading it down to there. But let's just take it one step at a time. You see this last two up candles before the down move is a balanced price range between the buy side delivery, right, and the sell side imbalance. So like we've already rebalanced this, one pass up, one pass down, and a clear pass up. This is balanced. So I wouldn't mind seeing it trade back down to there, but it doesn't need to. That's a pretty significant amount of points. So what I would do in this situation is just take the up candle there, down to the low here. This is scenario number one where price could buy from. It's kind of similar to what we had on the DXY. You see that? Price action is a little bit different, right? You see how the BPR lines up here on the DXY? Well, on Euro, we basically have a huge breaker, right? So just focus on that. This is a potential area where price could buy from. You can see this on Monday, a Monday move like this, and that's good pips. So I'm going to go ahead and just say, hey, we're going to call this daily BPR inside in the center, right? We don't want to see it break this low here, like right here. We don't want to see it break this old high I meant, because if that happens, that's indication that we're trading lower for the week. So this is your Monday setup. I want to take out this high, which already looks like it's about to be taken. I want to close a strong up candle at this dotted line here, or dashed line. And I want to see it break this at the end of the week. At least these highs would be much appreciated to be broken right here. We break these highs, fam. This is a really good situation for buyers, right? Really good situation here. Any questions on Euro before I go and give you your GU analysis? I am going to mark this though over here just in case. Don't want to see it come down here, but I will mark it. Right, because it is a bullish order block. So scenario number one, remember, is they catch support here, they trade up and close inside of this resistance. Scenario number two is they're bearish. They either run previous day high and they're bearish Monday, Tuesday, Wednesday, Thursday reversal, or Friday wild card reversal down here at support. Okay. Scenario number three is the week closes bearish in retracement. They run previous day high and they short all week and we end down here. That would be a bearish retracement week. Remember, it's not a break of structure until they break this low. So the macro would still be bullish. The order flow would be kicking in. The overall yearly order flow. So I'm going to go ahead and, I don't think I need to write the other parts of the model, but I will write this here as accumulation. I forgot how to spell accumulation. Right, this is the original consolidation. We'll call this the manipulation phase, right? All this was manipulation phase, right? All this bearishness in line with the order flow just to what? Give you smart money reversal. GU is a monster. Love it. One of my favorite pairs. So this is great. GU is like, to me, GU seems like an easier buy because it's trading much cleaner. Like the expansion on EU was just overkill. Like it really was. We have our market structure shift. We have our market structure break on GU, clear market structure break. Our objective is to take out this high this week. That would be the objective. And then this is our areas of resistance. Inside of there, we have a SIBI, right? So we like that SIBI. We know that we can get reactions off that SIBI, but we're bullish. So let's just remain bullish and target that area. That's all off the weekly. So clearly we have a nice bullish order block here, right? This is all I would mark here on the weekly. The fact that we have a bullish order block. Go to the daily. refine it. Ah, don't you love that when the weekly bullish order block lines up with the consequent encroachment of the fair value gap? That's great. So we have a weekly bullish order block with BISI consequent encroachment. Daily BISI. We love that. We like that a lot. Now, obviously, it's the same situation. We've had a market structure break, so we can have a Monday setup where this old area here becomes support. Why is the objective to take out the highs and not to fill the consequent? Because we're looking to buy, right? We're buying. It's not to say that this can't happen. This can happen.
Oh fuck.
This is in line with trading higher. But the objective in terms of liquidity is to get at least the consequent encroachment of this weekly mitigation block and then to target buy side. So like it depends on the kind of trader. Well, no, literally the objective is still the same for the macro. It's not going to be any different. It's still to take out buy side. The thing about these fair value gaps and all the people who are coming from the ICT camp is that we think that every gap needs to be traded to. It does not in that moment. We have a propulsion block that formed here and broke the gap. You see that? It filled the gap and made a propulsion block. So ideally, these are the things that I'm marking on my chart here. I don't want to see price get anywhere.
Yeah, I marked that too on my chart, that propulsion block, and there's a BPR literally to the left of it. So, you know,
You got to mark the propulsion block. You need to. You got to have it there because you never know.
Yeah.
It's the same scenario as I've been saying on the other two currencies. Is that we could have a bearish retracement week, and then we
that's what I think is going to happen personally.
I mean, they could do this, boom, and then come down here on Thursday or Friday and then trade up, and that's fine. And then to answer your question, Janos, is that if this happens, Monday takes out previous day high and closes indecision or bearish, and then we get a swing high by Tuesday, then yes, the objective would be to retrace down to this propulsion block and fill the gap. But right now, as we're giving our weekly outlook, we don't think about bearishness until proven. So because we already know that this was a market structure shift, we've already broken structure. And by the way, this is a break of structure too. So we've had several shifts. On the weekly, this was a shift, right? On the daily, this was a shift followed by a break of structure here, right? And you see how they've been trading clean. This is why people don't like GU, is because look at how big the retracements are. But if you look at it and if you put on the daily separators, the weekly separators, these are starts of the week. Look at how they start this week after being bearish one week. Wednesday, low of the week, trades higher. Look, Thursday, Friday, low of the week, and then it anticipates the next start of the week to be bullish. Look, Thursday, sell into discount, right? BPR, bullish order block, and then Friday, take off. Look, last week, Wednesday, Thursday, push up. Wednesday, sell day into bullish order block. Thursday creates the propulsion block. So it's like, if you really, really look at it, GU has these large expansions on retracements, and that's what people don't like about it. But really, it's just volatility. Like it's the volatility of the currency. So this is what would be our weekly outlook, one shot, one kill. If it's a bearish retracement week, we don't expect it to break the mean threshold of this area here. Okay. And I would even say from here to there. Okay, so fair value gap, we've marked that. We've marked the potential daily BPR here that it could buy off of, right? We could buy off of this tomorrow. You know, there's nothing to say that it can't. And then we know what this is. This is the order block. We get mitigation block. So that's what we're looking at. And then this is buy side liquidity. Very easy, to be honest, like in terms of like what to look for. So this is what we got on GU. Any questions? Great. You guys are great. We've made a swing low. We've retested the weekly order block. We've made another weekly order block. Beautiful. We're at the mean threshold of a bearish order block. Ultimately, what we want to see this week is that they break that and close above this PPR, where the bearish order block is. I'm targeting 4,200 for the week. Minimum. I want to see 42 this week. Bonus, 43.45. Or whatever this candle's high is. 43.45.75. Yeah. This would be bonus. Don't want to see it break the mean threshold of this weekly bullish order block. And we're good to go. That's just looking at it from a weekly outlook. On a daily, you saw the 3 scenarios that I put in the PDF. Scenario number 1 is we trade into daily volume imbalance, trade higher. Targeting this for first day is get to 40.20. Volume imbalance, mean threshold, consequent encroachment of the SIBI. This is the minimum I want to see for a bullish day. Okay. Scenario number 2 is that they run previous day low, hit this weekly bullish order block, and we trade higher. This could be Monday, Tuesday to get down to here and trade higher. Scenario number 3 is they create a swing high on the daily, and they run down to the propulsion block where we have to aggressively buy in line with the macro to trade higher. It's very simple. We had this market structure shift last week. It hit the order block. We pulled up last week into fill the SIBI. We sold down into the bullish order block, created a propulsion block with news, and made another market structure break. We're bullish. So those are the 3 scenarios. It's very simple. Going to the 1 hour. We have this bullish order block inside the volume imbalance. We have a fair value gap here and another bullish order block. So you have to decide what kind of trade you're going to be. If you see at time of day that we're in a market structure, making a market structure shift, and we're now targeting downside. If you're going too short, just remember that, hey, if this happens and you're taking all this, that's fine. The moment it runs previous day low, you need to start considering that it can start trading back up. The moment it gets into this gap, it can start trading back up. The moment we hit this order block, it can start trading back up. So you're selling, make sure you're getting these entries. Don't be selling here. Don't be selling at the fair value gap here where it can trade higher. You're going to get these bounces. Don't get caught in that. You have to be selling at the highs of this price range. And if you're smart, and not if you're smart, if you're more frugal with your entries, then I would just say wait for the buys. But this is something you have to be on the chart. Now I sent it in the PDF of what you need to consider. You need to be there at time of day. If it's 8:30 in the morning and the setup is setting up for a bearish market structure shift and you want to take that for 25 points, then go be my guest. But this is the setup. Does anybody have any questions on ES? We have multiple targets on it. 1, 2, 3, 4 targets to the upside. 40.20 for Monday. I mean the consequent of coach. Why wait? I mean the consequent of the weekly fair value gap above. What? Yeah, this level here. Yeah, I want to see this taken out so we can get to 4,200. That's what this is. This is the consequent encroachment of this gap. So I want to see this high taken out in the beginning of September, the second week of September. I want to see that taken out this week. That would be great. 4,200. That's my terminus. That's my personal terminus. I'm looking for one shot, one kill to take out 4,200 for the week, and I want to make a lot of money. So live trading every single day. I'll be on the fucking charts. 8:15. to 11 every day. That's what I'm doing.
Christian, I have a real quick question. Can you go back to the hourly real quick, please?
Sure. Wow. Okay. Okay. Oh. Okay. Now I'm there.
Just expand your chart. What's this box that you have? The daily, what is
Yeah.
that? Yeah, what is that?
That's this. See that there's volume.
Oh, the void. Okay, sorry about that.
Well,
Okay,
it's
I
not a
got that
void.
too.
It's not a void. It's
Yeah.
a volume imbalance. A void would be like this, a series of down candles without any offered of buy side delivery. Like that's a void.
All right,
There's
got you. I had it marked off too. My bad. Thank
so
you.
like on like for example on my MetaTrader from Forex, people who trade Forex, this isn't even there. You don't even see that. So what we're looking at basically is this is Friday's price action. Friday's low, Friday's high. This is the dealing range we're in right now. So if you start to see after midnight they do this, and we're here at 8:30 in the morning, then what's likely to happen is this, right? And then you have to look at the stock market push up, and if it gives you this, then you could take that. But I wouldn't be taking this. This is not a buy I would take. I want to see a clear buy at my order block, not at the fair value gap. And it has to be in my 10 a.m. macro. If they give this to me in 8:30 to 8:30 before the stock market open, then it just potentially could take me out. So that's just something this could be a choppy Monday where London gives the high of the day and then we're sitting there and it doesn't even take out previous day high or low and it just sits here. Remember that week 2 weeks ago where it just sits there, and then in Asia it trickles up, does this, and then we have a bearish day Tuesday. This is the kind of Monday price action that you'll see where it does nothing. It just offers a short to discount. Tuesday, like in Asia, it trickles up into midnight. By New York, we're already above previous day high and previous week high, and then it shorts aggressively. This literally happened this week over here. Imagine this being your Monday tomorrow. Look, just stays inside and then shorts down to the BISC. That can happen right here. Literally, like this would be like you will be so pissed off. That could be your Tuesday. That's why I'm saying we understand Monday's tendencies is that this could happen, an inside day, with Tuesday being a shift. And then instead of going down like it did that week, it would go up. Because then we would be at our weekly bullish order block, right? And when we would trade higher. That's why this is one of those scenarios where we can trade higher on. So reading the script is going to be very key tomorrow. Gold finally makes its market structure shift. I mean, seriously, like I've been waiting for gold to do this. This is the key. This is what I want to see this week. I'll break a market structure. I like this a lot. I like how it's literally ran liquidity. All of this has been taken. All of this was taken. And they have basically created a swing low on the weekly and pushing up. So I'm looking at this old BPR here. Really the reclaim block. But we're not going to get into that. I'm going to do the levels on the daily. Long story short is gold is very much in a bullish retracement. Daily. Bam. What's up, gold? All right, cool. So this is the weekly market structure shift, right? On the daily, the shift happened here. We've already broken structure, right? So if the weekly's already in motion and the daily's in motion, we could just change this to buy side liquidity, right? This is our terminus for the week. Anything above that is cake, butter, right? We have a bearish order block here. We have all this resistance, but to me, it's like this is all cleanly traded into. There's only one last up candle here before it actually came down that hasn't been traded into. But to me, if I can get all the way up to there, that's a whole daily range. So I'm looking at this holding right here, that low. As long as this low holds, I don't want to see this low broken on Monday. This is my Monday setup. This low should not be broken. As long as this low is not broken, we're good to go on buys, continuation buys. I'm not going to put any extra stuff here. I don't think most people in here trade gold, so I'm not going to worry about over marking it. Can we trade gold futures? Can we trade gold futures same as gold? You can trade gold futures. It's $100. It's like dropping 10 lots. So it's $100 a point. So if you're trading a prop account, you're going to get crushed. You have to be a super scalper. And I believe in at minimum, you need at least a 20 pip stop or a 2-point stop loss. So you have to risk like a lot of money. You know what I mean? You're throwing 10 lots, that's $1,000 a point. If your daily drawdown is $2,000, you lose in one trade, you blow your account. Most of you aren't trading big accounts, I think. So if you are, even if you have a $3,500 daily drawdown and a $4,500 max, you really can't afford to trade gold futures. You need a big account to trade gold futures, or you just need to be willing to lose your account. That's not to be discouraging. It's just, it is what it is. They don't let you trade contract unless if there's a way to trade micros, and I don't know. I don't know about that. But check out gold on the 4-hour. I think it's due for a minor retracement on gold. So I would want that in the 1-hour. Yeah, pretty fun stuff on gold. Yeah, I mean, look, here's the deal with gold. There's 2 scenarios on gold for tomorrow, right? Comes down, trades higher here, or breaks these lows. Here's order block, fair value gap, trade higher. If it fails to trade high and creates a swing high, well, then we know what it's doing. It's retracing down to this level here. If it breaks that, it's a retracement week. That would be a retracement week. And then you'd be looking to buy gold. Basically, you can see all of this taken out. I'm trying to like use my drawing tools and I can't. They could take out all this liquidity, buy at the weekly order block down here, or they can buy here in this area here. So again, it's like almost everything I've said today. The Monday setup is continuation. If Monday closes in decision, we make a swing high, it's retracement down to the discount array on the higher time frame. You take those entries. It's always going to be like that. This is what makes trading so difficult, is that you have to follow a narration. You know, and the more steep that the price action becomes, the harder it becomes to trade.